Okay, I call this meeting to order. Welcome to meeting number 129 of the House of Commons Standing Committee on Finance. And pursuant to Standing Order 108(2) and the motion adopted by the committee on Tuesday, January 30th, 2024, the committee is commencing its study on non-prime lending and the criminal interest rate. Today's meeting is taking place in a hybrid format pursuant to the standing orders. Members are attending in person in the room and remotely using the Zoom application. I'd like to make a few comments for the benefit of the witnesses and members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. Interpretation for those on Zoom, you have the choice at the bottom of your screen of either floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. Although this room is equipped with a powerful audio system, feedback events can occur. These can be extremely harmful to interpreters and cause serious injuries. The most common cause of sound feedback is an earpiece worn too close to the microphone. We therefore ask all participants to exercise a high degree of caution when handling the earpieces, especially when your microphone or your neighbor's microphone is turned on. In order to prevent incidents and safeguard the hearing health of the interpreters, I invite participants to ensure that they speak into the microphone into which their headset is plugged in, and to avoid manipulating the earbuds by placing them on the table away from the microphone when they are not in use. A reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. For members on Zoom, please use the raised hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. In accordance with the committee's routine motion concerning connection tests for witnesses, I'm informed that the committee that all witnesses have completed their required connection tests in advance of the meeting. And now I would like to welcome our witnesses. With us from Acorn, Canada, we have the national representative, who's Donna Borden. Welcome. And joining Donna Borden is the Research and Communications Coordinator, Bhumika Jam. And that's one of our witness groups. And the other witness group is Prosper Canada. We've got Elizabeth Mulholland, who's the Chief Executive Officer with Prosper Canada. So at... Can I say something
on this?
Okay, yes, on this.
So in the motion that we passed for this study on predatory lending, we had specifically, the committee had asked that the Canadian Lenders Association come to committee. And could you clarify why they're not appearing?
What I can tell you is that I know we've got Sasha here, Alexandre, but the other Alexandre Roger, who's not with us here today, that is our clerk, standing clerk here for our committee. Makes every effort, with all witnesses, makes every effort possible to being able to get witnesses here. I know that he did reach out to the Canadian Lenders Association a number of times and was not successful in being able to have the witness that you'd asked for to be here.
So I would just say, I'm incredibly disappointed with that for a few reasons. One is those witnesses were in the motion. They were given notice. One of the members of that organization, I understand, had confirmed attendance as of Friday, and at the last minute now they've pulled their presence at the committee. One of the reasons we're having this study, one of the primary reasons, is because of the unfounded allegations that these folks have put out into communities, and we have low-income folks who are being taken advantage of, the folks that these people represent, and for them to now to speak in the media and everywhere else but be unwilling to appear, especially when they were given notice and had previously confirmed their attendance, to me is incredibly disappointing. So I just wanted to make sure that you understood and that it was put on the record how disappointed I am. If we're serious about studying this issue, then these folks need to be here.
Okay, well, thank you for that, MP Baker. As I'll reiterate, I do know that our chair makes all best efforts to be able to have our witnesses here, and I know personally that having heard from Alexandre that he did reach out to to the individuals from the Canadian Lenders Association to be here, and like I said, made every effort for them to be able to appear. So. But they are not here with us today. We do have some other witnesses. I do see MP Chambers. Would you like to?
Sure. Thanks very much, Mr. Chair. I always enjoy the opportunity to speak to the experts. As my colleague mentioned, certain people were invited. I think we also have to recognize, I mean, notwithstanding that this winter is a little bit different than others, like it's vacation time. And when we are very rigid on a date, on you need to appear or we want you to appear on X date, and someone isn't in the country, I would give you as chair, or I would submit, at least it would be reasonable for you as chair and the clerk to use some discretion to say, well, if this is the witness we would like to hear from, maybe we would move the date. We programmed out the motion to be very specific about today was the day where we were having this hearing. That was set before we had any discussion with any witnesses. Now, I can't speak to the particular details of the current situation, but if we want to have very specific requests on individuals, we may need to be a bit more, I would say, I would give more flexibility to you as chair and to you as the clerk to say, look, this individual we want is not available on the 27th, but they are available on this date. Can we change the motion, or can we just like have unanimous consent to like move this meeting to next meeting? I worry now that we're going to end up, I don't know what the plan is for future studies on this, but anyway, let's get to the witnesses here today. But I think because we were fairly rigid on the date, I think that prevented us from potentially hearing from witnesses that we wanted to hear from. So you have, at least from me, an ability to make recommendations on changing dates in the future, depending on availability of witnesses.
Thank you. Thank you, MP Chambers, for that. I'll just speak to MP Chambers. I'll just say, you know, that is up to the committee, to the members in terms of what can be done. What I went by is the motion. I looked to the team and, of course, our clerk that does a outstanding job, I think, for our committee, and did provide in terms of flexibility. I know did provide flexibility for not on the date, but in other ways for the witnesses to appear. Unfortunately, they're not here with us, and that's where we are. MP Baker.
Look, first of all, I don't know, Mr. Chair, if the folks from the Canadian Lenders Association cited that it was vacation time when they explained why they couldn't appear. To me, this is not vacation time. Like, this is not March break. This is not the middle of August. And the folks from Canadian Lenders Association, on a full-time basis, are out there advocating, spreading misinformation in the media, and defending actions that are hurting the most vulnerable in our society. So they were given notice. They confirmed appearance on Friday, so they weren't on vacation. They weren't planning to be on vacation as of Friday. Suddenly, they've apparently booked a vacation on Monday and Tuesday. So that, to me, doesn't hold water. I'm just expressing my disappointment because I think this is clearly a priority for them, and if it's a priority, the forum to discuss this is here when the Finance Committee is doing a study on the topic.
Yeah, thank you, MP Baker. I'm going to go to MP Thompson, but I do want to get to the witnesses that we do have with us today, and we do want to hear from and their remarks, and we want to get to members' questions. But MP Thompson.
Thank you, Mr. Chair, and I'll be very brief. I do want to note that we have the option of hybrid. CLA is not an independent witness. It is an organization, and with all due respect, hybrid, even if someone is on vacation, allows for witnesses to join from wherever it is they find themselves. So I think their absence today is noted and unfortunate.
Okay, thank you, MP Thompson. You're right. We do have the hybrid opportunity for
Mr. Chair,
flexibility.
Just on this point,
Yep.
I
MP
did
Morantz.
see in the notice of meeting of the Canadian Lenders Association was on the notice, but I didn't see a name of a person. So I'm wondering if they did, in fact, confirm that they were going to be here or not. There's some confusion around that. So there was never a name. Normally, there's the name of the organization and the name of the individual. The notice didn't have the name of an individual at all. It didn't have Mr. Schwartz or anyone else on it. So I just would like the clerk to confirm that they did actually have confirmation that the Canadian Lenders Association and someone from that organization would be here.
So the clerk is not with us here today, Alexandre Roger. We have another Alexandre that is with us here today, but does not have that information. What I can tell you from the information that I do have is that the clerk did reach out to principals within the organization and they were not able to join us. So that's what I can tell you.
Did the clerk or you, Mr. Chair, reach out to the Ontario Police Association as well?
So I don't reach out to the witnesses. It is the clerk that reaches out to the witnesses. So I do not have that information for you. But I don't believe, because they were not one of the witnesses that was cited within the motion.
Yeah. Okay. Great.
Okay, so now to our witnesses that have been waiting patiently, and we thank you. We thank you for that, and we thank you for coming before our committee for this study. We'll start with Acorn Canada and Mrs. Jam, if you could start for us. And I know you're sharing your time with Ms. Borden, please. Yep.
That's right. Thank you so much for having us today. Acorn is very encouraged by the federal government's decision to lower the interest rate for installment loans from 48 to 35%. Acorn's Fair Banking campaign has been asking for this change for years now, and we're happy that this is finally happening. The evidence through a series of surveys and testimonies of low and moderate income people refutes the claims of lenders that it helps people in any way or improves their credit score.
Mr. Chair, I'm very sorry. Could you please ask our witness to slow down? One, for our translators, and two, just even for me. Thank you.
Okay. Yeah. So we want to make sure that we hear everything that you have to say, and we do have interpreters here in the room, so to interpret English and French. So if you could just slow down a little bit in terms of your pace, that would be helpful. Thank you.
Thank you, and sorry about that. Acorn is very encouraged by the federal government's decision to lower the interest rate for installment loans from 48% to 35% APR. The evidence through a series of surveys and testimonies of low and moderate income people refutes the claims of lenders that it helps people in any way or improves their credit score. The latest survey by Acorn to low and moderate income people highlights the impact of high-cost loans to 623 community contacts. This research was funded by the Federal Office of Consumer Affairs, and the report was reviewed by the distinguished professor in economics and public policy, Brenda Spotton-Bossano. The study shows that 80% of respondents reported stress, anxiety, and depression. 72% said it resulted in even more debt. 67% reported adverse effects on their credit score. 1/3 said that their loans got refinanced multiple times. Majority were highly unsatisfied with the high-cost loan. As far as claims made by lenders that this move will impact their profit margins and the industry will cease to exist, there is enough evidence that points to the contrary. Many states in the U.S. have lowered the interest rate for a 2-year, $2,000 installment loan from 32.5% APR. To 32.5% APR and 25% APR for a 5-year, $10,000 installment loan. Yet, lenders continue to thrive. Quebec is the only province in Canada that already has an interest rate cap of 35%. goeasy, in fact, in its annual report says that they will be expanding in Quebec. It also says in its annual report that the new federal interest rate will benefit goeasy and those with scale in the long term, and it is well prepared to adapt if this federal interest rate is lowered. Research in Alberta by El Hazuri et al. On payday lending shows that lower allowable interest rates did not result in decreased access to credit, nor did it result in more riskier borrowing. Payday loans in most provinces had a fee of $21 per $100, which now stands at $15 per $100, but payday lending continues to thrive. Decreased access to high-cost credit results in much better alternatives, not riskier alternatives as the industry suggests. The USA's National Consumer Law Center's extensive survey of research found that once a state limits rates, in state after state, consumers are better off and find better ways to cope with financial challenges. DUCA's 2020 report on the state of fair banking in Canada, and DUCA is a credit union, it notes the significant negative economic and well-being impacts of high-interest predatory lending. The report helped inspire the launch of DUCA's Escalator loan, which provides access to fair credit for borrowers. These are the kinds of models we want to support, not high interest fringe lending. The amount of money someone would save taking out a $5,000 installment loan over 5 years with the rate lowered from 48 to 35% is $2,000 and more. And this is a substantial amount of money saved for those who need it most. I'd now hand it over to Donna Borden to share her experience. Thank you.
Ms. Borden, sorry, you were on mute.
Yeah, I just figured, sorry, thank you so much. Hello, and thank you for having us today. I took out an installment loan several years ago from City Financial. It's now called Fairstone. I borrowed $10,000, paid back around $24,000 after 5+ years. Then I realized I still owed $7,000. The lender kept renewing and refinancing my loan without my knowledge. Refinancing is a common tactic employed by these lenders so that the borrowers can never come out of a debt trap. If there's one thing that we've heard from people who've took out these high-cost loans is that it's never again. These lenders charge a maximum interest rate. Doesn't matter whichever is lower even after paying. Pardon me, I'm going to correct myself.
Yeah, we're going to have to stop, Ms. Borden.
Okay.
Yeah.
Yeah. Sorry.
We're just having some trouble with your sound from your mic, so just hang on one second.
Sure.
And
Thank
we're
you.
just going to we're going to suspend just so we can see if we can fix your sound and make sure that the interpreters are able to get a clear sound from you. Thanks.
Okay. Thank you.
Don't have to be rushed, and don't if you try to keep your head just steady so you don't move a lot when you're speaking.
Okay.
Okay, thank you. Go ahead.
So these lenders charge a maximum interest rate, which is never lowered even after making payment for years. The real cost of borrowing is extremely difficult to understand, as all kinds of fees, insurance, etc. are bundled into the loan. Most often people end up filing bankruptcy or consumer proposals because it's impossible to pay off the debt. The Canadian Lenders Association is saying that people will have to go to payday lenders and illegal loan sharks. For one, installment loans and payday loans are two different credit products. Average amount of a payday loan borrowed is $500 and is payable in the next payday. This is not to say that payday loans are better, but given the huge increase in installment loans, this move is critical. Also, fringe lenders often act and resort to the same tactics as loan sharks. The bottom line is that lowering the criminal interest rate will reduce the harm caused by predatory loans. And it's good for people and it's good for society. As the federal government moves forward with the criminal interest rate to lower the criminal interest rate, we'd like to see a fair credit alternative so that people don't have to rely on these loans. Thank you.
Thank you, Ms. Borden, and thanks for your patience. And as we work through some of our technological challenges. So now we're going to hear from Prosper Canada, and Elizabeth Mulholland, please.
Thank you very much, Mr. Chairman. And thank you to the committee for the invitation to speak with you today on the issue of predatory lending and the government's proposal to lower the criminal rate of interest. In my remarks, I'm going to speak primarily to the impact of this proposal on Canadians with low incomes, as this is our domain of expertise. Prosper Canada firmly supports the government's proposal to lower the criminal rate of interest as a means to reduce the burden of debt on low-income households and the risk that the loans they take out will rapidly balloon into runaway debt. Members of the high-cost lending industry claim that the proposed change will deny low-income and subprime consumers critically needed credit and valuable opportunities to improve their credit scores. Nothing could be further from the truth. A high-cost loan is never the best solution for someone who is low income, credit impaired, and/or struggling to make ends meet. There are also very few occasions in which this is the only solution open to people in these circumstances. Allow me to explain. Prior to the pandemic in 2019, 51% of low-income households carried no consumer debt at all, knowing that even small loans can quickly become problematic when you are already struggling to make ends meet. In fact, low-income Canadians at that time were already spending an average 31% of their annual income just to service their debts. High debt repayment costs compromise the ability of people with low incomes to meet their basic needs, as the incomes of many are well below the poverty line. This can in turn drive them to borrow more to cover their necessary expenses. To point, as of June 2023, 33% of households with low incomes in Canada reported that their household debt level felt somewhat or very unmanageable, and 42.6% of households with low incomes somewhat or completely agreed that they had increased their borrowing to help pay for everyday expenses. When a low-income consumer has a temporary income expense gap and no savings or interest-free source of credit, for example, a family member, friend, or employer from whom they can borrow, then short-term commercial credit can be a good solution if the rate is reasonable and the consumer has the means to repay the loan. Loans at effective interest rates over 35%, however, are not reasonable for low-income consumers, for whom even modest additional expenses can quickly cut into their food budget or their ability to pay their rent or their utility bills. Nor can many low-income consumers afford to repay such loans, as evidenced by the Acorn Canada survey that was cited earlier that found that 72% of low and moderate income respondents reported their loans and their efforts to repay them at these high interest rates caused them to go further into debt, and 11% reported having to file a consumer proposal or file for bankruptcy. For consumers with chronically insufficient income to meet their basic needs, the problem is not inadequate credit, it is inadequate income and borrowing money is not the solution. Taking on debt when you are chronically short of income is like punching a larger hole in a boat that is already leaking rather than fixing the leak. It does not save you, it only sinks you faster. The solution to an inadequate income is to find more income and or to reduce one's expenses. Consequently, the best immediate option for these households is financial counseling that can help struggling consumers to review their budgets for potential savings, identify and access in-kind services and supports that reduce their expenses. These can be public drug plans, subsidized housing, food banks, and other supports available variously in different communities. They can also identify and help people access income benefits and tax credits they may be eligible for but not receiving. 1 in 5 people with low incomes across Canada currently do not tax file. As a consequence, they miss out on an average of $3,500 a year in income, and potentially much more than that if they have children under 18, are a senior, or if they live with a disability. For people who have not filed in a number of years, the simple act of filing their back taxes can result in tax refunds in the tens of thousands of dollars, eliminating their need to borrow. Tax filing also helps people with low incomes to establish their eligibility for a broad range of in-kind supports and services that can make their lives far more affordable. With respect to establishing a credit score or repairing damaged credit, high-cost loans are also never the best option. Newcomers and young people who are credit invisible are far better off obtaining and responsibly using a secured or low-limit credit card to build a credit history. A secured card is an equally good option for anyone seeking to repair their credit. In contrast with a high-cost loan that is far more expensive and, according to Acorn's survey, actually lowered the credit scores of 67% of low and moderate income borrowers. Finally, high-cost lenders would have us all believe that without them, low-income people would fall prey to loan sharks or worse. Consequently, lawmakers should give them free rein to charge their current rates. This is also nonsense. The proverbial baseball bat aside, there's actually very little to distinguish a high-cost lender today from a loan shark. Both charge exorbitant interest with no regard for their consumers' ability to repay, and then hound and pressure them and their families relentlessly when they fall behind in their payments. Both are hurting people. 80% of ACOR survey respondents reported stress, anxiety, and depression as a result of not making all or most of their high-interest loan payments. Fortunately, people with low incomes do have alternatives to high-cost lenders. For non-emergencies, they can opt not to borrow at all and instead to wait and save for the expenditure in question. Consumers can also sometimes find ways to free up needed resources, for example, by selling something, by using a rent bank or food bank, or by accessing relief programs offered by utility providers. Or they can access other less costly forms of credit. In Acorn's survey, only 22% of respondents who had borrowed over the past year had resorted to a payday or installment lender. 71% had used a credit card or borrowed from a family member, friend, or a bank. Low-income consumers are too often seduced into taking out high-cost loans by their ubiquity, the ease and speed with which money can be accessed, and clever marketing that emphasizes low monthly payments at the expense of the actual true cost of the loan. However, high-cost loans are never the best or even an acceptable solution for people with low incomes, and they are very rarely the only solution open to them, despite slick and specious claims to the contrary. Reducing the maximum criminal rate of interest as proposed is a much-needed and welcomed reform. With more and more struggling households taking on debt that they cannot afford, this measure cannot come soon enough. I would also invite the committee, however, to explore additional ways the federal government can help to put this terrible sector and its toxic financial products out of business for once and for all. These include investing in community financial help services to close the current financial help gap for 1.5 million Canadians with low incomes, and to connect them to $2 billion in additional income benefits for which they are eligible but not yet receiving. For more information, I refer you to Prosper Canada's 2024 federal budget proposal. There's a link in my statement.
Thank you.
helping.
Thank you, Ms. Mulholland. Yep. So just we're kind of well over time into the remarks
I'm sorry.
by witnesses, but you'll have a lot of opportunity, I'm sure, to add to what you've had to say in members' questions, and that's where we're going right now. So in our first round, each party will have 6 minutes to ask questions to our witnesses. We are starting with MP Chambers for the first 6 minutes, please.
Thank you very much, Mr. Chair. I appreciate the presentations by our witnesses. Thank you for coming today. Perhaps I'll just start with Acorn. In your submission to the Finance Department, I think you made reference to wanting to encourage, or I don't know if force is the right language, banks to lend to what I guess we call the non-prime space. Is that fair?
Thank you. Can I go ahead? Can I go ahead and answer the question?
Yes, you may.
Okay,
Yeah, go ahead.
thank you.
please.
Yeah, so basically Acorn's proposal was that the federal government basically backstops some of the what we call the fair credit benefit for low and moderate income people, which could be administered by the banks. We know the banks will not themselves do this because they don't see any profit in doing so, and they're probably also evaluated on insolvency and stuff. But I think what we were hoping the federal government could do is to do something like a fair credit benefit, which could be administered by the banks or even like through a nonprofit agency. It doesn't need to be a bank.
Fair enough. So on one level, you are like, you do recognize that access to credit is an issue, and you want to make sure that people have access to credit, correct?
Correct. Yes. But fair credit, yes.
Sure. Subjective term, but yes, agreed. So if there is evidence or suggestion that policy actions will potentially reduce people's access to credit, is that not a concern to you?
Well, we don't believe, one, that this particular move will lower the access to credit. I mean, when payday lending, we've seen like the payday loans case as well, where Acorn was when we had this campaign where we were pushing the provincial governments to lower the fee when it was around like $21 per $100. Even then, the payday lending industry said that, oh, this access to credit is going to be lowered because we are lowering because there's been a push to lower the fee from $21 to now it's $15 on an average for a payday loan. But we don't see the payday lending, it has not been eliminated. In fact, we see payday lending stores everywhere in our neighborhoods. So we think that this is not going to happen. This industry is going to survive, and it's in fact, as I said, goeasy in its annual report, and goeasy is Canada's one of the biggest installment lenders, and it says in its annual report very clearly that they see their growth further expand, and they're very well suited to adapt if at all this change were to happen. So we have evidence, and we also believe that access to fair credit will improve if this measure were to be adopted.
Okay, thank you. Were you able to make these recommendations to the government? Like were you able to make
Yes.
representations to the minister's office or the government about fair credit and your submission?
Yes.
Okay, so you had meetings with finance officials, and okay,
That's right.
thank you
Yes.
very much.
Thank you.
Why not make the rate 10%?
Well, Acorn has been pushing for 30% and lower.
Okay, well, why not 10?
Well, sure. Like we know that credit cards charge anywhere between 20 and 22%. So like a lower interest rate definitely is better than, we know that even 35% is huge. It's not still fair credit. But we do know that, and for us at Acorn, we've been saying 30%. We know that there was a proposal even by Senator Pierre Ringuet, who said that, who was asking for 20% plus Bank of Canada in prime rate. So anything, I mean, we know that a lower interest rate will help consumers.
Thank you very much. Ms. Mulholland, you mentioned wanting to remove this toxic industry from operating. Do you, like, is it your position that any of these lenders provide no valuable service to Canadians anywhere under any circumstances?
I think Canadians have been progressively growing more and more indebted. More and more households are struggling with unmanageable debt, and exorbitantly priced debt with no regard actually for people's creditworthiness. It's not a good financial product that builds financial well-being for anybody.
Are you aware?
There are probably a small number of people that can effectively use it on a very short-term basis.
Are you aware that just by
to tide them over in a pinch, but we don't have good data in Canada.
Thank you very much. Are you aware, but just by walking into a payday loan facility, that you are multiple times more likely to file for bankruptcy? And should we not be trying to avoid those types of situations?
I think they're both likely to cause people to go bankrupt, and I think we should absolutely be trying to avoid those situations. And I think the government needs to put real energy into creating more accessible, lower cost, small dollar credit for low and modest income households. And I think Acorn has outlined one approach. We've outlined some ideas in our submission to the government. There are lots of interesting models. There are a number of credit unions that offer great alternatives to payday loans that are far more affordable already in Canada. And there's a great model in Australia of free and fair loans for people with low incomes administered by the Good Shepherd nonprofit, but with funding from the federal government in Australia.
Thank you very much,
and
Ms.
the participation of their national bank.
Thank you very much. I just want to make sure that the chair continues to put me on his Christmas card list, so we'll come back to you.
Good. Well, thank you very much to both of you, and we'll get to those Christmas cards. And MP Baker, please, for 6 minutes.
Thanks very much, Chair. So I'd like to ask Ms. Mulholland a question. The Canadian Lenders Association has made claims that reducing allowable interest rates will leave consumers without options when they are short on cash. And yet, I would point out that Easy Financial's latest annual report shows they've reduced the weighted average interest rate from 46% to less than 33%. And they are strategically increasing their presence in Quebec, which has a 35% interest rate cap. GoEasy, which is Mr. Mullins' company, Mr. Mullins is with the Canadian Lenders Association, has done the same. So in your view, doesn't this point to the ability of lenders to simply adjust their risk tolerance rather than limiting access to credit?
Yes, it would seem so.
Okay. And could I ask the same question to our friends at Acorn?
Could you please just repeat your last sentence, MP Baker, if you don't mind?
Yeah, given what I just said about the fact that Easy Financial's annual report shows they've reduced their weighted average interest rate from 46% to less than 33%.
Right.
And they're increasing their presence in Quebec, even though they've lowered their interest rate, right? And GoEasy, Mr. Mullins' company, has done the same. So I think what I'm asking is, does this not point to the ability of lenders, like these ones I've just cited, to simply adjust their risk tolerance rather than limiting access to credit?
No, exactly. That's exactly the point. We know that they're making a huge profit out of this business. And like lowering from 48% APR to 35% APR will still allow them to make enough profit. like decent profit. And like you quoted from Easy Financial's annual report, they're saying that they're already lowering the interest rate for some clients from the highest to 33% or 35%, although we haven't seen that happening among Aecon members who have experience with Easy Financial. But if that's happening, they're still making a profit. They're still expanding in Quebec, which already has a 35% interest cap. So why are they concerned?
Yeah, good question. Good question. I'd like to ask, again, Ms. Mulholland, but I may ask it, I'd ask this question to both. So I would ask, I'll just ask the question once and start with Ms. Mulholland, but then turn to you if that's okay. So industry argues that the high rates that they charge are necessary to cover the costs of higher risk lending. So in your view, don't these claims fall short when we examine the growth of the more affordable lending alternatives in the marketplace? And what I mean by that is I'm thinking of the small dollar loan programs at credit unions, the Canada Post My Money loan, and small dollar loans in the fintech sector. So Ms. Mulholland, I'll turn to you first if I could.
I'm not a business analyst, and I haven't analyzed this industry. So, but I would say if companies are growing and their profits are growing, then there is certainly room to reduce the interest rate and still make a profit, would be the bottom line.
Right. And over to our friends at Acorn, if I could.
Yeah, no, we completely agree with Elizabeth. They're making huge profit. And just making a little less profit is not going to harm this industry at all. And in our survey that we did last year, which actually focused on fair credit alternatives, we saw that there are a lot of credit unions who are doing this, who are providing, payday loan alternatives. So obviously the scale is limited, but at least there is that space available. Desjardins is providing such an alternative nationally, not just in Quebec or Ontario. It's available nationally. So there are those, like you mentioned, Canada Post My Money was a decent product. Unfortunately, it got discontinued after a while, but it was a good product. So the energies need to focus on providing fair credit alternatives rather than, maintaining this industry, which is just not the solution to access to fair credit for low and moderate income people in our country.
I appreciate that. I think I have about a minute left. Is that right? Yeah, about a minute left. So Ms. Mulholland, I'll ask you this last question if I could. We've got about 60 seconds. And you've spoken to this a little bit, but I think we're all aware of the Canadian Lenders Association's claims that lowering the criminal rate of interest will lead to limited access to credit for lower income Canadians. I just want to make sure we get you on the record. What is your view about that claim?
I think it's false.
I'll turn to our friends at Acorn since we have a few seconds left.
No, it's totally false. As we've seen, not just in study after study, but in the US, where it has already been lowered for installment loans. People are turning to better alternatives. There is increasing number of better alternatives coming up. People are able to, they resort to different means and not go to, as these Canadian Lenders Association are claiming, that they'll go to payday loans. And as we also specifically mentioned, payday loan is a different product altogether than an installment loan. And we are seeing a huge jump in the uptake of installment loans. So this needs to stop. This is predatory. This is only going to push people more into poverty instead of helping them.
Thank you very much.
Thank you, MP Baker. And now to MP Saint-Marie. Welcome virtually.
Merci, Monsieur le Président. Donc,
thank you, Chair, and good morning to all three witnesses. Thank you for being here, and thank you for your presentations and your answers so far. We very much appreciate the fact you're here. I'm going to cite a consultation paper on the proposed changes to the criminal rate of interest that was published in 2022 by the Department of Finance. And I'll read that extract and then I'll put a couple of questions to the two organizations, I'll ask you to react. So here's the citation. The criminal rate of interest was not established with the intent of being a financial consumer protection measure to combat the growth of high-interest loans. Rather, the provision was meant to deter loan sharking and other predatory practices where lenders offer credit at high interest rates and employ intimidation, violence, or threats of violence to enforce repayment. A fixed interest rate of 60% was included in the offence to provide a level of certainty. An objective standard was expected to be easier to prove rather than the prosecution having to prove that there was violence or intimidation associated with the loan. That was the end of the quote. So for the two organisations' first questions, do you think that creating this offence did it allow us to be successful in prosecuting or reducing the occurrence of coercive practices, enforcing repayment of these types of loans? I don't know which organisation would like to go first to answer this question about whether the offence has been successful.
Oui, Madame Mulholland, vous pouvez
Yes, Ms. Mulholland, you could go ahead.
I can't comment on whether it's been successful as a law enforcement mechanism, although I believe Professor Gail Henderson at Queen's University has written a paper on this and suggests that it's only been used at a very small number of occasions by law enforcement. So I would say it's probably not succeeding on that front, as well as not succeeding as a consumer protection measure. And I would only say in conclusion that I think we need to aim higher. We should be aiming to have financial products and services available to Canadians at all income levels that help them build their financial well-being. If our only bar is that it's not criminal or it's not actually involving a member of organized crime, physically harming you, then it's good enough. That's a pretty low bar and it's not really sufficient for Canadians.
Merci beaucoup. Est-ce que Madame Jamb, oui?
Thank you. Ms. Jamba, please.
Sorry if I'm not sure if I understood the question correctly, but as far as I understood, I think you're specifically speaking to the enforcement piece, which is the ability of borrowers to prosecute lenders, if I'm correct. So, we believe that, enforcement needs to go hand in hand. We do know that at this point, the way it is at this point in the Criminal Code of Canada, it's very hard to prosecute these lenders because one needs like an actuarial certificate. So our submission has been that the enforcement piece needs to be strengthened at the same time as we are doing this. Also, there is one more element to this, which is like a lot of these lenders have been adding insurance and other products. So 60% is the maximum rate, but then on top of it, lenders can add insurance and other products that actually takes the interest rate much higher than 60. And Donna is here today, and she herself had an installment loan from City Financial at the time. And when she went to City Financial, they said that do whatever you want, nobody can touch us. So this is really problematic because lenders think that, nobody can prosecute them. And the problem is that the enforcement needs to be strengthened as we are moving towards lowering of in criminal interest rate because those go hand in hand.
OK, merci beaucoup. C'est très éclairant.
Thank you very much. That was very enlightening. Turning to another subject, again, for the two organisations, here I'm referring to a survey that's carried out by the Financial Consumer Agency of Canada about Canadians' financial well-being. And the Consumer Agency, according to the surveys, has seen that there's an increase in the percentage of Canadians who are using online lenders or payday loans. And apparently, according to their surveys, it's gone from 1.9% in 2019 to 4.52% in September 2022. And among this group using online lenders or payday loans, 40% of the respondents said that they used a short-term payday loan or cash advance, and 30% reported using an instalment loan in September 2022. We've also seen that Indigenous peoples, recent immigrants, and low-income Canadians were found to be more likely to have used these types of loans. So have your respective organisations witnessed any changes in the demographic characteristics of people using online lenders or payday loans? And perhaps we could start with Ms. Mulholland.
I'm afraid we haven't done any research on that specifically, so I can't provide an answer. I'm hoping Acorn may be able to.
Sure. Thank you. Yeah, no, we during the pandemic we tried understanding exactly, if there's been an uptick in accessing high cost credit, and obviously there was an increase, and it's like we've been saying, it's quick, easy, that's their tagline: fast, fair, fast credit, convenient, and these lenders were actually deemed essential during the pandemic. So obviously there's the growth in these lenders online, but again, as we are saying, this is not a fair credit alternative. These are equivalent to loan sharks. They are predatory, and we are just very encouraged that the federal government is moving towards lowering the criminal interest rate, because that's really the right way to go.
Thank
Merci
you.
beaucoup.
And merci,
Oh,
MP
merci beaucoup.
Saint-Marie. And that's the time. You can go in
Thank you very much.
the next round, but now to MP Blakey.
Thank you, Mr. Chair, and thank you to our witnesses. I know I know that neither of our witnesses are in the business themselves, but there was some reference made to the annual reports of some of the companies that are engaged in installment loans. I'm just wondering if the witnesses have a sense of like what margins those companies are making when we're talking about profit. I know you had said that they're making more profit, but I wonder if you have a sense of the margin. If not, that's all right. I know we're going to be trying to talk to those companies as well, as per the discussion at the beginning of today's meeting. So we'll be happy to get some of that information from them. I do have one more question along those lines, and if you don't know the answer, that's all right. As I say, we'll be talking to them as well. But I'm curious to know what the bad debt level for installment loans is in terms of loans that they make that they don't collect on.
I don't think that's publicly available to us, so it's hard to know. It's corporate information, so.
Okay. Well, that's something we'll be asking the companies as well. So the other thing that I want to just kind of narrow in on, there was some talk before about the ways that installment loans are marketed to Canadians. And of course, there are industries where we have regulation around what companies can and can't do in terms of advertising. So I take the point on the need to lower the criminal rate of interest. It's something that New Democrats have been advocating for a long time. But I wonder if either of you or either of your organizations have done some thinking around the ways that installment loans are marketed to Canadians, and if you have any suggestions for whether that's a space you think there should be some intervention to ensure that when Canadians are receiving messages about the credit options available to them, that they're made fully aware of what the consequences are, and that misleading advertisement about what may be available to them isn't something that they have to contend with.
Okay, should I go ahead?
Yes, please.
Why don't you go ahead, Bhumika, and then I'll jump in.
Yeah, sure. Thank you. Definitely there's a lot that one can do in the installment lending space for sure, particularly because we know that there's no complaint mechanism at the federal level in case a person wants to prosecute or, take these, ask any questions or take these lenders to court. Or even file a complaint. There is no mechanism that exists. And in our submission, Acorn has said that we need a complaint mechanism at the federal level so that people have some sort of space where these issues can be taken to. I'll also let Donna speak about her experience about her installment loan, but I think one of the things that we've noticed is in the absence of fair credit alternatives, these lenders are pushing. So, for instance, if a member has a payday loan, they're enticed to take an installment loan. And a lot of our members have been enticed to do that because, you're paying regularly your payday loan, why don't you take a $5,000 loan? And in that vulnerable situation, when a person needs money, this is exactly what you do. And as Donna mentioned in her remarks, it is very, very difficult to understand the cost of borrowing. It's not about people that they're not financially literate. It's just that the numbers are so hard to understand. And on top of it, as I mentioned, there's insurance, there's late fees, there's a lot of things that are bundled into the loan that make the interest rate much, much more than 60%. Donna, in case you want to add
Quickly
something.
on the question of complaints, and then we'll go to Donna. I just wonder, one of the things that's happening now is government is going back to a regime where we have one ombudsperson for making complaints about Canada's financial institutions. If I'm hearing you right, that doesn't apply, or it doesn't cover payday lenders. Do you think that it should?
I don't think it would cover payday lenders.
A different place where people go to make complaints about payday lenders.
Well, we believe it should be a different space for predatory lenders because the way it works is different. So, yeah.
Can I just, on this one, I think there's an issue of jurisdiction. These fall under provincial jurisdiction and their consumer protection regimes, not the federal government's, because they're not federally regulated banking institutions. I think, though, that there is a role for the Financial Consumer Agency of Canada to do research on effective practice in regulating this type of space as well, and to work with its provincial counterparts to try to build some commonality across and greater protection for consumers, including a recourse mechanism that they can access. But also, I think, even if there were a standardized way that they push these lenders to provide simple, clear, transparent information on the true cost of their loan, not just interest, but all the other charges, insurance, et cetera, that go with that. And in our submission, we talked about the financial facts labeling that the Mission Asset Fund has used in the United States very successfully. It looks like a food nutrition label, but it's a financial information. And also the use potentially of having the Financial Consumer Agency have an installment loan, term loan selector tool that inputs this information and allows consumers to compare different installment loans that are in the market and to select the one that best meets their needs. In that way, when they did that with credit cards, it drove actual fees down because consumers could easily compare them for once. And that immediately forced cards that weren't doing so well and weren't getting selected to kind of adjust their rates and their features to be more competitive in that. So if we could create more tools to help consumers see clearly and be able to compare easily the rates, then that would go a long way to giving them more power to make good choices for themselves. Right now, it's extremely difficult.
Thank you.
And so that ends our first round of questions. We're moving into our second round. Just for the witnesses' sake, the times are a little bit different in terms of how much time members have to ask questions. We are starting with MP Morantz for the first 5 minutes.
Thank you, Mr. Chair, and I want to thank our witnesses for being here today. What I want to get your opinion on, and we could start with Prosper, I suppose. Since 2015, since this current government came to power, housing prices in Canada have doubled, sometimes more than that in certain markets. Mortgage payments have doubled, again, sometimes more than doubled. Inflation got up to 8% at one point, and although it's coming down now, the damage is done. Everything is more expensive, and it's really made basic necessities unaffordable. Interest rates went up faster than ever before, from basically almost 0 to 5%. There are homeless encampments all over the country, 10 cities. I had the mayor of Guelph here last fall, said when he got elected in 2014, there were no homeless in 10 cities in Guelph. Today, there are 20. We know that millions of Canadians are lining up. By some reports, 2 million Canadians are lining up at food banks. And the Financial Consumer Agency of Canada has reported that the usage by Canadians of payday loans has gone up by 237%, from 1.9% in 2019 to 4.5% in 2022. Do you think there's any correlation between the difficult times that Canadians are going through and the increase in usage of payday loans?
I think obviously the cost of living and inflation rates have put additional financial pressure on households. I think these are a global phenomenon right now. I'm not sure they're attributable to the actions of any one government. I think there are other dynamics at work that we can all read about in the newspaper. But I would say that if you look over the past 30 years, Canadian households have been increasing their debt loads and their savings levels have been dropping. So there are broader structural drivers that have been at work in Canada for decades that are causing households to become less and less financially resilient. And that I don't think Canada has done as good a job under any government of unpacking what is actually driving these changes over the past decades and putting in place solutions to help households become more financially stable and resilient. And I think if we look to the US, the UK, Australia, and even New Zealand, they've done a much better job than we have at understanding what is driving these changes and in putting in place national solutions in partnership with the financial sector and their community sector. And I would encourage our government, whoever is in government, to be working in the same direction. Thank you. I'm afraid I have to leave for a medical appointment. So I'm going to have to say goodbye and thank you to the committee for having me today.
Well, we thank you, Ms. Mulholland, and we understand. Okay, and you still have time, MP Morantz, another minute and a half.
One of the things I was wondering about is if you look at the current proposal, it would peg the criminal rate of interest at 35% APR, which is 30 percentage points above the current bank rate of 5%. I'm wondering, instead of, one of the problems with pegging it at 60% or 47% APR was that when that happened in the 1980s, the bank rate was actually 20 or 21%. So as interest rates came down, the spread as to what was criminal became larger, and so it became almost impossible to charge because very few lenders were really needed to get to that criminal rate. Wouldn't it make more sense to peg the criminal rate to the bank prime so that if it moved down or moved up, for example, 30 percentage points above bank prime, if it goes down to 3%, then the criminal rate would be 33%, for instance. What do you think of that type of suggestion?
We've maintained a fixed rate more than, keeping it variable. Obviously, a lower rate is better than a higher rate of 35%. We were just, encouraged by the fact that the federal government is moving towards lowering it, and we did see a further consultation to further lower the criminal interest rate from 35%. Once it is 35%, to further lowering it to whatever level. So we're happy that this is going further, but yeah, it's hard to predict how, like we saw the interest rates changing fast. So some level of fixed rate or predictability probably is better in this point. But yes, we do agree that a lower interest rate is definitely something that we'd prefer.
MP Morantz, and now we're moving to MP Zarowitz, please, for 5 minutes.
Thank you, Mr. Chair, and I want to thank our witnesses, -1, for their excellent presentation. I had enough questions for the second one, but since we only have our two witnesses from ACORN, I will direct my questions only to them. I'm going to start off actually with Ms. Borden. Ms. Borden, you provided testimony about the need to take out an installment loan. I would say the average Canadian actually doesn't know what an installment loan is. So if I could maybe just ask you to explain why it is that you felt you had to go to an installment loan and what other options you might have considered. I just want sort of the average Canadian who might be listening sort of to understand how you got to where you are and what other options. And you have about a minute to do that because I have a few other questions. Thank you.
Okay, sure. I went to the Royal Bank, which was my bank for 30 plus years. I want to consolidate all my forget, so I'd have the one payment. And they said that I didn't have bad credit, but I had too much credit, and they referred me to City Financial, saying that they would be able to help me. So I never even knew about them until the bank referred me to them.
Referred you to them, and so you said that you took out a loan of $10,000 and 5 years later paid, was it $24,500?
Close to $24,000. I paid over $24,000. Yes.
And it was Royal Bank that actually recommended that you go to this
Yes.
organization.
Yes.
Okay. When you were signing and signing on to this installment loan, was there full and clear disclosure of the costs before you actually signed the agreement?
Well, they showed me the agreement, and I asked the questions. I thought I was asking the proper questions. Like, I thought I knew how interest was calculated. I said, oh, is it like a credit card? And I asked them all these questions, and then she said, oh, yes. She showed me the statement, and I asked her about the different fees, and she said, oh, no, that's only if you don't pay it off. You pay this many payments for this many months, and it's paid off, and it just wasn't. It was just never paid off.
Okay, thank you so much, and thank you for sharing your experience with us. It's very, very helpful. My next question is to Ms. Jam. Ms. Jam, I have a press release from the Ontario Association of Chiefs of Police and the Canadian Lenders Association, and one of the quotes in this press release, it says, under the legislation, so what we're proposing, illegal predatory lenders would take advantage of Canadians by operating online from outside the bounds of Canadian jurisdiction. By forcing legal responsible lenders out of the marketplace, we worry Canadians will be targeted by this type of criminal activity. Can you maybe comment on whether it seems like there's a concern out there that these changes might increase criminal activity, might actually push people like Ms. Borden to other options that might be worse. And so I wouldn't mind if you could comment on that, please.
We believe that, thank you so much for the question. We believe that this is really a false claim. Like I said, when payday loans, the fee was getting lowered from, like when we were pushing to lower the fee for payday loans as well, it was the same argument that people will be forced to go to, loan sharks and this industry will cease to exist. But none of that happened. Payday lending industry continues to exist. And what really pushes people into crime is poverty, not, these fringe lenders. I mean, we don't want these predatory lenders to take advantage of people who are already in a vulnerable situation. And that's exactly what's happening today. So lowering of criminal interest rate will really help reduce harm, as we've been saying. It's a positive step, and we really support this move. We don't think that it's going to lead to increase in criminal activity. Donna wants to say something. Thank you.
Yes, and Donna, actually, I wanted to go back to you, Ms. Borden, just to say, if you didn't have access to an installment loan, what would you have done? So that's question one. And then two, anything else you might want to respond to in terms of the question I had. Just ask Ms. Jam.
If I didn't, I probably just would have tried to go to family and borrow money off of family, or, just stuck it out and just paid all the separate payments. But I did go there. But I also like to point out near the end, when I tried to file a complaint against this company, I was told that they were bulletproof and they could do what they want. Nobody would do anything to them. I went to several complaint agencies and there was no process. I did go to the police to file a complaint because they threatened me. They threatened to come and smack the money out of me, and they threatened to come to my home. And when I did go to the police officer said to me, if you took out a loan, you would have been better to take a loan out in the loan shark, because we would have went after them and already arrested them. But these people, he said, we don't know where they stand. We don't have any regulations. We have nothing to go by. He said, if you go to court with them and they say that they did something wrong, then we'll charge them. But other than that, they couldn't do anything.
Thank you so much, Ms. Borden, and thank you, Ms. Jam.
Thank you, MP Zarowitz and our witnesses. And now we're going to MP Sainte-Marie, please.
Oui, merci, Monsieur le Président.
Thank you, Chair. First of all, Chair, I'd like to inform you that my next round of questions will be given to Mr. Morris from the Green Party, but I'm still going to put my questions for this round. I'll start with a comment. Ms. Borden, I'm very much touched by your story. That's terrible. And I very much hope that as legislators and the government together can introduce rules so that this type of situation does not ever happen again. I have a more technical question to put. And once again, I'm referring to the consultation paper published by the Department of Finance in 2022, where it said that the criminal rate of interest is a very broad measure that applies to all credit products in Canada, except for payday loans made in accordance with Section 347.1 of the Criminal Code. So I've got two questions. Should there be additional exceptions? And secondly, should payday loans be subject to the criminal rate of interest? Thank you.
Thank you for the question. We don't believe there should be any exemptions. In fact, there was a consultation recently about making pawn loans as an exemption, and we believe that even pawn loans less than $1,500, equivalent to less than $1,500 should be an exemption because pawn loans are also equally predatory. Regarding the payday loan specifically, there was a specific exemption carved out for payday loans, and that's when the whole regulation of payday loans moved to provinces, and that's really, led to this whole differential interest rate that we see across different provinces and territories, and it's very high. It's 400% to 500% APR for payday loans. And yes, we do believe that payday loans should come back into the ambit of Criminal Code of Canada.
Je vous remercie beaucoup. Monsieur.
Thank you very much, Chair. How much time do I have left, sir?
You have about 15 seconds.
Oui, bon, ben, je vais m'arrêter là, sinon ma prochaine.
Well, I'll leave it there. Otherwise, my next question would have been too lengthy, and it's Mr. Morris who will field the next questions. Thank you to the two witnesses again.
Mr. Morris, MP Morris will have an opportunity. So we are going to MP Blakey now.
Thank you very much, Mr. Chair. And just with apologies to the witnesses, I want to put a motion on notice with the committee, so I'm just going to read that out before posing my next questions. The motion that I'm putting on notice is as follows, Mr. Chair. Given that the grocery sector has made more than $6 billion in profit in 2023, and that millions of Canadians have reported food insecurity in the last year, the Standing Committee on Finance call on the government to immediately take action by implementing an excess profit tax on large grocery companies that would put money back in people's pockets with a GST rebate and establish a national school food program, and that this motion be reported to the House. So thank you for your patience, witnesses, while I do that bit of business. And I just wanted to ask, we've heard definitely of the importance of lowering the...
Appel au règlement, monsieur.
Point of order, Chair. Sorry, Danielle. The interpreters have told us that they have not received a copy of that motion. It's always useful to give them this, so it was not interpreted.
Just MP Blakey, if you'll distribute that, and if we can get also a soft copy, electronic copy, also to our clerk, and he'll get that distributed. Merci, MP Samari, MP Blakey.
Répété en français aussi. Étant donné que le secteur a réalisé plus que 6 milliards de dollars d'un bénéfice en 2023 et que des millions de Canadiens ont fait état d'insécurité alimentaire au cours de l'année écoulée, le Comité permanent des finances demande au gouvernement d'agir immédiatement en mettant en œuvre une taxe sur les bénéfices excédentaires des grandes entreprises d'épicerie qui remettrait de l'argent dans les poches des...
And we'll put money back in the people's pocket with a GST rebate. We've just received the motion now, so I've started reading it now.
Yeah, so I'm going to ask you to go through it one more time.
No problem.
Yeah, okay, from the top, yes.
Are we good to go?
Yes, you're good to go.
Étant donné...
Given that the Canadian grocery sector made more than $6 billion in profit in 2023 and that millions of Canadians have reported food insecurity in the last year, the Standing Committee on Finance call on the government to immediately take action by implementing an excess profit tax on large grocery companies that would put money back in the people's pocket with a GST rebate and establish a national school food programme, and that this motion be reported to the House.
Mr. Chair, and with what time I have remaining, I just wanted to ask our witnesses, we've heard for sure about the importance of lowering the criminal rate of interest. I'm wondering if there are some other measures that you haven't had an opportunity to share, either that would protect Canadians from predatory loans or to increase the non-predatory credit options that would be available to them.
Yeah, sure. Thank you. So we've been pushing for fair credit benefit. That's something that the federal government could do. That could be either administered by the banks or by a nonprofit agency. Like Ms. Mulholland was stating as well in her remarks, Good Shepherd in Australia has provided a good alternative in the country where it was supported by the federal government and administered by a nonprofit agency. So that's alternatives such as these could provide fair credit to people who need it most. We are seeing more credit unions offering credit products. We saw Duca Credit Union start a Duca Escalator loan recently. So there are these products that are becoming more and more available, offering a payday loan alternative. We want to see more of such alternatives. As I said, Canada Post TD loan product was a decent product. Unfortunately, it got discontinued. We've also been pushing postal banking as an alternative because we believe that's something that could be that could offer people a fair credit alternative. So there are such alternatives that can be made available rather than giving fringe lenders a free market to exploit vulnerable people.
Thank you, MP Blakey.
My next round I'll give to Mr. Morris as well, so he gets a proper block.
All right, MP Morris, you're going to have a lot of time in the next round. So we've got MP Lawrence now for 5 minutes.
I am tempted to give my time to Mr. Morris as well, but I'll refrain from that. Even though I do quite enjoy Mr. Morris and find him to be, I'm sure his questions will be excellent. I do want to have a serious discussion with our friends today. They are great witnesses. It would be great if we had some more, as per Mr. Baker's and comments there. But when we look at these issues, I guess I get to a mind where we would like to be, and I don't think anyone here would disagree, in a situation where anyone needed to go to a payday loans or their comparables. And so when I look and I see the fact that we have record food bank usage and we have had high inflation, and the Governor of Bank of Canada came before this very committee and said that the carbon tax alone was represented for 20% of inflation, including 20% of food inflation. And if we saw a dramatic decrease in inflation, one would only think that it would be logical that the reliance on high interest loans would be dramatically decreased. Do you think that has any solvency? I know that hasn't been certainly the responses I've been hearing, but I've got to think the underlying poverty issue, and you can't legislate prosperity, so that is 100% clear, right? So what we really need is we need the economy to start rolling. We need higher levels of productivity, and so that more people are helped by not needing the help of government. The floor is yours, my friends.
No, thank you. I mean, I don't think I understood the question correctly, but I think, like, in terms of, ACON's belief is that at least when it comes to basic services, especially housing, income security, government has a primary role to play. We cannot leave. We've seen what's happened to housing when we leave it to the market. to enforce standards. And we've seen how the rental prices have gone up, given the lack of adequate tenant protections and tenant control.
I 100% believe your heart is in the right place. The reality is, over the last 8 years, we've seen more government intervention, which has the results are clear at this point. They are clear. There are more people who are unhomed. There are more people who are in difficult, vulnerable situations. There are much higher levels of poverty, of food bank usage. This is clear. This is from your own organizations. 8 years of more government intervention has led to dramatic increases in poverty.
Well, we do know, at least in this space, that more government intervention is the right answer. Predatory lending industry is not going to solve this problem. It's only going to push people into more poverty.
Okay, let's just say it's not the ideal solution. The ideal solution is for everyone who is able to be given an opportunity to start a successful business, to have a great job. Is that not where we want to be?
Yes, but that can only happen when people have basic needs met.
Right, exactly. And the vast majority of Canadians who have achieved those goals have done through the private sector. Do you not believe the private sector has a role? Is it not the economy that can, granted, taking care of those individuals who have unfortunate circumstances who take them, but don't we need to drive a healthier, stronger economy, an economy that has a rate of growth not in the negative but in a positive, not to make wealthier people wealthy, but to help the most vulnerable, to give them that hand up, to give them that first opportunity?
Donna, you wanted to say something?
Yeah, the reason why we have so many homeless people is because the government hasn't stepped it up and it hasn't had proper rent control. So what's happening is Acorn said prior to the pandemic that people were going to end up homeless. They're going to end up in the streets if we don't do something soon because the rents are being jacked up.
I do appreciate that. I just got a limited time.
Yeah.
Lawrence, just the crosstalk and allow members, witnesses to answer your questions. Yes.
But the one thing I did want to get on the record as well, one of the things that could, I think, really help those folks who are at least in a position, some people aren't in a position, and I think we should acknowledge that, to review their financial position. If you have no money to eat, it's no matter how much disclosure you have, you're not going to make the right decision. That's just the reality of it. But for those folks who are in that position where they can make a decision, don't you think open banking and the ability to switch between financial institutions, and with that, I think you've talked about transparency and being able to choose from a multitude of vendors so you can get a better rate. More competition would also be helpful.
Mm-hmm. Yeah, but also with these particular companies, the installment loans, there's like all of us could go in there and we're all going to be charged the same amount. They don't have any, we'll review your financial situation. You're going to pay 11%. You're going to pay 20%. Where these other alternatives, like the banks or like the other loan companies, the other, help me here, because what was the different types of financial loan, they were willing to review your financial situation and say, okay, we can charge you. And then after you pay for so long, you develop your credit and then you can pay lower interest. These companies don't do that. They go right to the top and they charge you all these fees. They charge you interest. They charge you insurance without your permission. They renew it without your permission. Whereas if you have an alternative, which you're right, that's what we want. We want alternatives. We wanted people to have a choice to be able to go and find a loan where they want to without being turned away. But unfortunately, like myself, even though I had the money, was at a bank for 30 years, I was told, go to the installment loan company.
Okay, thank you, and thank you, MP Lawrence. And now a point of order.
I wonder if Mr. Lawrence would like for the committee to invest in a Ouija board so he can call Anne Rand as a witness and perhaps get the answers.
That's not a point of order, but
we're
going to go on. We're not going to address Ouija boards here. We're going to MP Thompson, please, for 5 minutes.
Milton Friedman would be good as well.
Jan, I'll start with you, please. In 2007, the Harper government decided to exempt payday lenders from adhering to the criminal code's maximum interest rate and transferred the regulatory enforcement to the provinces. Some argue that this resulted in a patchwork of inadequate regulation and enforcement and enabled payday loan interest rates to soar, topping to 600% in some areas. Since then, there are stronger payday loan regulations across the country. However, and really thanks to your work at ACORN and your advocacy, installment lenders still fall, however, through the regulatory cracks. And I wonder if we're seeing lenders turn towards installment loans instead, following provincial policy changes. If so, where is this most prevalent? If you could speak to that, please.
Thank you so much. We wouldn't say obviously we are seeing a jump in the uptake of installment loans. So when we did the survey in 2011 and then 2016 and we did it in 2021, there was a 300% uptake in installment loans. So installment loans are definitely becoming popular, and that's exactly why we want this move to go ahead, because installment loans are much higher amounts of debt payable over a longer period of time. So a person who's having a debt of $10,000 is paying a huge amount of interest rate and is probably never going to pay the debt that they owe. So definitely there has been an increase in the number of people who have taken installment loans, and also the entire industry has adapted to offering more and more installment loans. But payday loans also, I don't think it's either or. Both kinds of products are quite common in the absence of fair credit alternatives.
Thank you. And how will federal changes interact with PT regulations? And does this federal change lead to a close in the regulatory gap?
So what we did learn from the last fall economic statement was that the federal government wants to put a cap on the fee for payday loans to now $14 per $100. Obviously, that's a positive move, but it's still high. Obviously, like $15 per $100 is equivalent to 500% or 400% APR. So that's still a very high amount of interest rate that payday lenders will continue to charge. A long-term solution would be to bring payday loans back into the ambit of Criminal Code of Canada, which also regulates installment loans, because right now there is an exemption. So that would be a long-term solution. And the federal government will then again have the power to regulate payday loans as well.
Thank you. I mean, given a current environment of certainly higher interest rates and rising costs of living, vulnerable Canadians may increasingly be forced towards high cost loans, which tends to aggravate, not alleviate existing financial challenges. Have you seen this more frequently, in other words, people falling into the debt trap in the last 2 years?
Not specifically. I mean, obviously, we don't have the numbers, so to say, to cite. But obviously, as I said in my initial remarks, we did a survey back in 2023 to 623 of our community contacts, and a lot of our members resort to payday loans and installment loans, which is high-cost loans. This is exactly why we want the interest rate to be lowered, because in the absence of fair credit alternatives, people don't have a choice but to resort to these kinds of loans. So definitely, as the cost of living increases and we don't have fair credit alternatives, these loans become more and more popular.
Thank you. Perfect. I want a quick final question, and Ms. Borden, maybe if you could speak to this as well, but I'll start with you, Ms. Jam. Existing government programs, certainly through CRA or using community access to allow people to understand the importance of being part of CRA and able to maximize the benefits they receive from government, and also the existing support that the government provides to people to help with affordability issues. How is this impacting on the vulnerable sector that you're seeing through ACORN, and indeed, how is it that we can expand the supports or the availability of supports to help people with their financial needs?
Well, one of the measures, thank you again for the question. One of the measures, again, that Prosper Canada has also been recommending is automatic tax filing, because that's something that will really help a lot of Canadians, low-income Canadians especially those with children who currently don't have access to those, tax benefits that will now be able to access if automatic tax filing was something that was pursued. So yeah, I mean, there are all those benefits, but a lot of people are unable to access them at this point.
Okay, thank you, and thank you, MP Thompson. And now, witnesses, members, we are moving into our final round, our third round, and we have MP Morris. You've got 5 minutes, and just so you're aware, because there's been a lot of generosity here. You're going to get another 5 minutes after I believe it's MP Baker will go after you. So MP Morris, please, 5 minutes.
Thank you, Chair, and thank you, colleagues. It's really appreciate the chance to be a part of this conversation. It's a really important one. I want to start by thanking ACORN and Prosper Canada for your advocacy this afternoon, in particular to ACORN, not only for your advocacy here in Ottawa, but in my community also. The chapter in Waterloo Region has been just a wonderful ally for folks who are facing rent-evictions. And so I wanted to say thank you again to the good folks at ACORN for how you're bringing your lived experience to some really important advocacy, both in Waterloo Region and, of course, here this afternoon. Ms. Borden, I wanted to say thanks for sharing some of your lived experience. It reflects what many of in my community have shared with me in terms of the debt trap. The story you shared in terms of borrowing $10,000, I think you'd shared. You'd paid back $24,000 and still owed $7,000 by the end. I think speaks to the real injustice of the issue that is meant to be addressed by this change. To reduce these predatory interest rates down to 35%, certainly a step in the right direction. My questions for Ms. Jam, specifically with respect to the association representing lenders who started this letter writing campaign. My office has received 2 of these letters. I know ACORN and Momentum has put out a statement that refutes the myths shared in these emails, including that in Quebec, this 35% maximum interest rate has already been in place for years, and the industry seems to still expand in that province. I know ACORN's actually pushing to reduce the maximum rate even further, but I wonder if, Ms. Jam, in like a minute or so, if you could summarize the myths that ACORN has dispelled to help folks to make sense of some of the emails that we're receiving.
Thank you, MP Morris. One of the biggest arguments, I think, posed by Canadian Lenders Association is that this industry is going to not continue to exist, or borrowers will have to go to loan sharks. But we've maintained that, like you said, in Quebec, the interest rate is already capped at 35%. Yet, Go Easy, Canada's one of the biggest installment lenders, boasts to its investors that they are going to expand much more and more in Quebec and other urban markets. So if they were incurring a loss, or if it was really affecting their profit margins, why would they go to Quebec and expand further in Quebec? So that's really clear that there is enough profit margin to make even if the interest rate is lowered. And they also say that in their annual report very clearly that they are very well placed to adapt to this lowered interest rate. And in the U.S. also, state after state, we have seen a lot of the lowered interest rate, and still this industry thrives.
Thank you, Ms. Jam. I also really appreciate that ACORN has shared concerns about the loopholes in draft regulations, specifically loopholes for pawn loans and commercial loans. And I think this is a really important time to be sharing those concerns so that those regulations might be amended and improved upon. I've got about a minute or so left. Could you share in that last minute more to kind of summarize those concerns of how Acorn would like to see these draft regulations improved, so that that experience that Ms. Borden shared earlier, like that's the actual intent, is to ensure that that doesn't happen to folks in my community and others across the country. Can you share briefly how you'd like to see these regulations improved to get rid of these loopholes?
Sure, thank you. We're mostly in agreement with the draft regulations, except the fact that there was an exemption specifically mentioned with respect to pawn loans, for which the amount is equivalent to $1,500 or probably $1,000 as far as I remember, or lower. And we spoke to a lot of ACON members about this issue, and we know that a lot of people, again, who have pawned their gold or whatever, have never been able to get it back because of the predatory criminal interest rate that pawn loans carry. So it's the same argument that pawn loans should be regulated in the same way as we are furthering as the government further lowers the criminal interest rate. Pawn loans should not be exempt.
Thank you.
Thank you, and thank you, MP Morris. And you'll have another opportunity. Now we'll go to MP Baker.
Thanks very much, Chair. And, look, I expressed earlier my disappointment that the Canadian Lenders Association didn't appear. I wanted to reiterate some of the reasons I'm disappointed. And I'm disappointed because they were a feature witness for this study. They've been putting significant resources out there to communicate their point of view, which I think is misinformation, in my personal view. They had confirmed attendance as of Friday, then suddenly canceled. One would think that they'd want to make themselves available to share with MPs their point of view, but this was also an opportunity for us to learn more about the subject and learn about the allegations, the misinformed allegations, in my view, that they're putting out into the public. And so I think it's really important that we send a message as a committee that we're disappointed with the fact that they haven't appeared, especially the fact that it was a last-minute refusal to appear, given that they had initially confirmed. And I also think it's important that we get the answers to the questions and get the information that I think we would have sought from them. We've been seeking from our wonderful witnesses who are here today, and we appreciate your presence here today. But I think that we obtain the information that that the representative from the Canadian Lenders Association could have provided and chose not to appear to provide. So I would like to move a motion, Chair, on the subject. And I'm willing to pause to make sure that we distribute copies in both official languages. I can pass them on to the clerk, and so that the interpreters have a moment to.
Let's just give everybody a moment to receive those, then.
And Chair, when you're ready, let me know, and I'll read.
I will. Yeah. Okay, did you get that electronically? Yeah, I got it. Okay, if you could. It electronically also, but there's hard copies coming around. And then we'll, MP Baker, will you be reading that also into the record? Okay, yeah, we'll just, yeah, and electronic for the interpreters, yeah. The interpreter got the copy, I think, yeah. Yeah. Do they not? No, they don't have it. Oh, they don't, okay. Oh, sorry, I thought you opened it.
I did give it.
Yeah, yeah.
First word.
Fix the budget. Stop the.
Didn't realize it was that elaborate.
Has everybody received a copy? No. Not yet? Okay. Okay, so everybody will receive an electronic copy, although MP Saint-Marie, who is virtual, has received it. MP Saint-Marie, just if you could give me a thumbs up, you've got it electronically? Yes? Okay, great. And I think you're good, MP Baker, to read it into the record.
So it reads as follows. Given high-cost installment loans are the second fastest growing type of debt in Canada, and that these products are disproportionately accessed by low-income Canadians, given that high-cost loans tend to aggravate, not alleviate, existing financial challenges where Canadians resorting to these loans have ended up in vicious cycles of debt as they struggle to cover the increased cost of bills, given the Canadian Lenders Association's extensive lobbying since the release of regulations in December 2023 to be excluded from the scope of regulations while refusing to publicly appear at committee to discuss their position, that the committee expressed its disappointment in the Canadian Lenders Association last-minute refusal to appear as part of the committee's current study, that in the context of its study on predatory lending and pursuant to Standing Order 108, bracket 1, bracket A, the committee send for any documents from the Canadian Lenders Association and its member organizations related to the following. 1, the total revenues and profits of CLA's membership, specifically of all publicly traded companies such as goeasy Limited. 2, goeasy Limited and Easy Financial's total revenues in the province of Quebec in 2022 and 2023. Given the rapid increase in high-cost lending services in the province, despite the maximum APR of 35%. 3, the total number and value of high-cost agreements granted in 2022 and 2023 broken down by province and territory. 4, the dollar value of CLA's advertising campaign regarding changes to the criminal rate of interest and how much of that cost is borne by borrowers' repayments. 5, all executive compensation and bonuses, including for the CLA's entire executive and board. That the committee receive the information no later than Monday, March 18th, 2024.
Thank you, MP Baker. Yeah, MP Chambers on this.
Thanks very much, Mr. Chair. We're just getting this for the first time, but at least it's unfortunate, and I wish the clerk well, that we don't have Mr. Roger here to discuss the how we got to this place. My understanding is that the CLA was refused appearance if goeasy was unavailable. So I'm not really, there may be a little bit of broken telephone here on why someone may or may not be available. And the accessibility of somebody to headsets, as was raised by Ms. Thompson, was certainly, my understanding, is an issue. I would also ask...
Point of order?
If I could just clarify, I didn't mention headsets. I mentioned hybrid as an ease of witness availability. So please, let's not confuse that issue.
Sure. So Ms. Thompson correctly identified that hybrid is an option. But in order to participate in hybrid, someone needs an approved headset. which I understand was not possible in this circumstance. I don't know how we get headsets to remote locations in the world. My understanding was that that was not possible. And then when that person was not allowed to or could not appear, that the CLA was told, because the one individual can't appear, you can't appear. So it seems to me that the government really wanted one individual to appear, and that person was unavailable. So instead of being flexible, government members refused to be flexible and said, well, we have to have the date in the meeting on this time. And here we are. I don't understand, number one, like there's a thing called Google, or reading financial statements. I'll reserve judgment on the rest of the motion, but like I think we may be able to solve this in a relatively more reasonable way if we had a little bit more information or a bit of flexibility on what happens in timing. To be honest, I'm not sure I personally want to extend this study. We've got a bunch of other things on the docket. We should have swapped something else in for today until we had the witnesses that the government absolutely wanted to have. So I don't know why we proceeded in the way we did. And I would be willing to give the chair and the clerk much more flexibility in the future to make sure, if there's a witness that we absolutely want to have, to make sure that they're available. I don't know why we pushed through today, and then now we're using that as an example, knowing that it was not possible. We're using that to kind of create the grocery experience here for the government. Which is like totally fine. It's like their prerogative, but we probably could have just had their moment in the sun if we just let them come a different day. So I don't quite understand where we're here, but we'll take it under advisement.
Thank you, MP Chambers. I have MP Lawrence.
Yeah, my apologies to the witnesses for having to. I believe Daniel called it listen to this business, or was the frame. So my apologies, and thank you very much for your testimony. I would like to move the following amendment, and it would commence at the very beginning of the motion, and it reads as follows. I apologize, I'm just doing this orally, so I don't have it in French, but I will speak very slowly, and we can have it translated quickly. Given that after 8 years of this NDP Liberal government, Canadians are facing the worst economy since the Great Depression, period.
Okay, on the amendment of the motion? Yeah, MP Baker.
So, from my point of view, I think it's I think the intent of the original motion was to get the information that we could have obtained if the Canadian Lenders Association had been here, had been present, and we could have asked the appropriate questions to get the information that we need. So, the purpose of the original motion, was to achieve that goal and to send a message of disappointment about their choosing not to appear. To me, this addition is meant to is basically the Conservatives playing politics, and I think we should refocus on why we're here, which is to make sure that we get the information that we need from folks who are out there dedicating a tremendous amount of resources to advocate on this issue, and who, in my view, were available and then chose not to appear. So I'm opposed to the amendment.
Okay, we've got MP Lawrence and then MP Morantz.
Thank you for that. This is, I think, appropriate context, and even in the meeting that I believe there were actually multiple rounds of questions with respect to the economic context that is motivating or animating individuals to take on loans, to take on additional credit some of it quote unquote fair and some of it quote unquote unfair. And so all that was meant by this was to add the additional context that in an economy where GDP per capita has only grown by just shy of 5% over the last 10 years, and where Canadians have record food bank usage, that it is no doubt motivating or forcing, maybe it's the right word, individuals to take on quote-unquote unfair credit. And I think leaving that out sort of does not tell the full story. Thank you.
Okay, I've got MP Morantz.
Thank you, Mr. Chair. I wanted to add a little bit more context to this discussion. And last night I received an email from Mr. Schwartz from the Canadian Lenders Association. It was sent to my
For a second, MP Morantz. So the preamble that was asked this in terms of this amendment, it's actually inadmissible. It's not admissible. Yeah. So, it comes in as debate, and it is not admissible, and it is not keeping with the spirit of the motion. So it is not admissible. And I've just conferred with the clerk. Yes, MP Lawrence.
I would bring another amendment then. And it would I'll read the first part of the motion and then read the amendment. Given the high cost installment loans are the second fastest growing type of debt in Canada, and that these products are disproportionately accessed by low income Canadians, and given that there are additional low-income Canadians because Canada's per capita growth has been less than 5% over the last 10 years. Semicolon.
Appel au règlement, Monsieur le Président.
Point of order. Point of order, Chair. I think you will see that there is unanimous consent vis-à-vis the witnesses. Now I'm doing a point of order. I think there is unanimous consent to release the witnesses because I understand we're going to discuss the motion and the amendments for the minutes remaining. So please release the witnesses.
It's unanimous consent to allow the witnesses to be released? Yeah.
I think we can finish this pretty quick.
No. So do we have unanimous consent, as MP Samaria has said? Do we do?
What?
To allow the witnesses to be released?
If they wish, but I think we might be able to fix this in probably 2 minutes.
Okay.
If they want to stay and Mr. Morris has more questions. So I don't want to, if you're open to
So we don't
hearing
have
as
unanimous consent?
an option.
Or we do?
Well,
Well, I think
Em-
not, so that we can
Okay,
proceed.
so okay,
We can
we're
get back to
proceeding. We do not have unanimous consent. Okay, are you next on? Okay,
Can I make-
MP Chamber. I heard another point of order though that came from this side. No, nobody. Okay, MP Chambers.
I'll
Yeah.
make a proposal, subject to my friend.
This is on the amendment.
Correct, on the amendment. If my friend would withdraw the amendment, and I'm looking for some direction from the government on this, that if we concluded, if this motion included a clause that this would represent, this information would represent the fullness of the evidence to be considered for the study, i.e. no more meetings, then I think we pass this right away. If that's acceptable, then I can try to make that happen, and we can get back to these wonderful witnesses and give some time to Mr. Morris.
Okay, so MP Chambers as. Okay, we're just going to suspend for a minute. Amendment is also inadmissible, just so members are aware. It's also inadmissible. It is inadmissible, yes, that preamble. So as inadmissible, that the amendment is inadmissible. So, okay, are we going back to, do you need time or? No. Okay. MP Baker.
Which amendment was inadmissible? Sorry.
They were both inadmissible.
Okay.
Both have been inadmissible, yes.
Okay. So from our end, we're comfortable with what Mr. Chambers has proposed.
Okay. All right. Okay. Okay.
On division? Pass it on division?
On division, members?
On division?
I prefer recorded vote.
Okay, recorded vote. Clerk?
Mr. Baker? Ms. Jerwitz?
En faveur.
Mr. Gahir?
In favor?
Mr. Lightbound?
Oh.
Ms. Thompson?
In favor.
Mr. Chambers?
Yes.
Mr. Halan?
Yes.
Mr. Lawrence?
Yes.
Mr. Morantz?
Yes.
Monsieur Saint-Marie?
En faveur?
Mr. Blakey? 11 yeas, no nays.
Okay, great. Unanimous. Carried. Passes. Okay. Now we are back to, do we have any time left for MP Baker? Yep. No, you're good. Okay, so I'm off to MP Morris. Yes. Yeah, you got a good 5 minutes. Yeah, and then we'll, yeah.
Great. Great. Thank you, Chair. We heard earlier in the testimony from Ms. Mulholland, she said the problem isn't inadequate credit, it's inadequate income. And so I wonder from the folks at Acorn Canada that are with us, I know you've been wonderful advocates for the Canada Disability Benefit because you recognize that 40% of those living in poverty are people living with disabilities. Folks living with disabilities have been disproportionately living in poverty for far too long, and that this disability benefit is meant to be a really critical measure to start to make progress on reducing legislated poverty for people with disabilities. And so recognizing, if you take a step back, that this conversation isn't just about the credit issue, but about inadequate income for people living in poverty, I wonder if Ms. Jam and or Ms. Borden, if you'd like to comment on Acorn's view on how important it is for our Parliament and this government to make progress on funding the Canada Disability Benefit.
Thank you, MP Morris. I think really well put. It's not. It's definitely connected with lack of, I would say, living wage. Because a lot of people with disabilities are forced into deep poverty because of very inadequate or abysmal supports that we see from provinces, and that's exactly why there is a push for federal Canada Disability Benefit, and we are glad that that's moving forward. It's really lack of living wage that pushes people into resorting to predatory loan products, and also lack of fair credit alternatives. And it's really a market failure, is what we believe, because if the market was working perfectly, we wouldn't have seen this to happen. We need government intervention in this space, and in fact more government intervention to solve this crisis that we are in today.
Yeah, thank you, Ms. Jam. And of course, when it comes to the Canada Disability Benefit, what we've seen is a piece of legislation get passed. However, regulations that have been very slow, very unclear on the outcome of that regulatory process. A minister who has now said that the benefit might not be rolled out until June of 2025. All of this slowdown while Canadians with disabilities continue to live in legislated poverty. We know this Parliament can move with urgency when it sees a crisis. There's clearly a crisis here for folks in my community and across the country who continue to live in poverty, and a very clear intervention that could make progress to reduce that. Ideally could have gone further if we would have been able to expand the legislation to include people over the age of 65. Unfortunately, that wasn't the case. Is there anything that Ms. Borden or Ms. Jam you'd like to add in terms of what you want to see from MPs in the lead up to Budget 2024 when it comes to addressing this inadequate income issue that is really the bigger overlying issue when it comes to the study that this committee is in the midst of? Looking at the chair, I think in a minute or
We've got another minute and a bit, and this will be kind of the final questions.
Great. So, kind of a final thought to you both as it relates to the need for Parliament to be expedient when it comes to not just talking about critical income interventions like the Canada Disability Benefit, but in fact funding them and making sure that it ends up in the bank accounts of people living with disabilities across the country.
Well, we fully support this move, and we hope that the government can act fast and also ensure that it actually promises a living wage and not just the kind of assistance that we see across provinces, which is actually pushing persons with disabilities into deeper poverty.
Yeah, and thank you again, Ms. Jam, for making sure the adequacy, what you've mentioned a few times, it's not just about funding the benefit, but ensuring that the benefit ends up bringing people above the poverty line. That adequacy has come through from ACORN and your members across the country throughout this advocacy, and I'd be remiss if to not also share about the really critical testimony that people with disabilities have been providing for many years to push for this benefit to come to fruition, and certainly hope that this conversation helps to be a part of that. Thank you.
Thank you, MP Morris. And on that, we do want to thank our witnesses for being with us. I'm just allowing the witnesses, just thanking them. Hang on one second. So just want to thank our witnesses and going through what you went through. I know we had some motions, et cetera, that we had to deal with here, but you've been terrific. You've answered a lot of questions. Your testimony will be used for this important study, and we thank you on behalf of the Finance Committee. And now I've gone, MP Hallen.
Thanks, Chair. I just want to find out for the information of the committee what we're doing on Thursday.
So I'm look to members. We had talked about Fez and
No, I don't think that's in there.
Members. Yeah,
No.
but we'll look into that, and we'll come back to you. We'll get back to the members. Okay, but thank you very much, and
Thank
members,
you.
we are adjourned.
Thank you.
Yep.